Ever notice how a gray divorce doesn't just break your heart, it threatens your entire future? Men over 50 tell me the same fear again and again. I can handle being alone, but I can't handle losing everything I built. And that fear isn't irrational, because at this age, you don't have 20 years to start over financially. You have retirement timelines, health realities, and a life you've spent decades building. Here's something most people won't tell you. In a late life split, the emotional pain is real, but the financial mistakes are permanent. One panic move in the first 30 days, one undocumented account, one careless text, one "I'll just be fair" agreement can cost you more than the divorce itself. So in this video, I'm going to walk you through 4 stages of financial survival in a great divorce. Not loopholes, not shady tactics. Clean, legal, practical steps that protect your cash flow, your credit, your retirement, and your dignity. And we're starting with stage 1 right now because stage 1 is where most men lose the most money. Stage 1. Stop the bleeding before you try to understand. The first switch you must flip is mental. This is not primarily a feelings conversation, it's a financial event. And if you stay in husband mode while she's in legal mode, you become exposed. Stage 1 means you stop making emotional decisions with permanent consequences. Here are the first moves. First, consult a competent family law attorney early, even if you're hoping it works out. You're not hiring a villain, you're hiring a navigator. Second, start an asset and debt inventory: house, retirement, pension, vehicles, business interests, credit cards, loans, tax liabilities. You're not doing this to hide anything. You're doing this so you don't get blindsided by surprises later. Third, protect access and information. Secure your email, banking logins, cloud storage, and key documents, because in divorce, confusion is expensive. And one more thing men need to hear: don't make major financial promises out of guilt. Not "you can keep everything," not "I'll pay whatever." Guilt is not a strategy. Before we go further, let me ask you something simple. Have you spoken to an attorney and started gathering your financial documents? Just comment yes if you have. If you have not, comment no. I read every comment and it helps me know what is landing. And if you are finding value in this kind of content, I would appreciate it if you would like this video and subscribe. It's a small thing, but it helps more men find these essential conversations. Stage 2. Build the document wall. This is where a lot of good men fall behind because you spent your life earning, not archiving. Meanwhile, divorce is paperwork. The man with the clearest documents usually has the clearest negotiating power. So here's what you gather calmly and methodically. Last 3 years of tax returns, W-2s or 1099s, last 12 to 24 months of bank statements, credit card statements, mortgage statements, home equity line statements, retirement statements, pension statements, insurance policies, and any business records if you own a company. If there's separate property, inheritance, premarital assets, get documentation proving it. Not because you're trying to win, but because in many jurisdictions, what you can prove matters. Next, pull your credit report from all 3 bureaus. You're looking for accounts you forgot, accounts you didn't authorize, balances that spiked, and liabilities that can quietly follow you. Set alerts on major accounts if available. And yes, change passwords and update account recovery options. Not out of spite, because access equals risk, and risk equals cost. Stage 2 is also where you stop trusting your memory and start trusting systems. Create one secure folder, digital and physical. Label everything. And write a timeline of major financial events: large purchases, renovations, business changes, major withdrawals, big transfers. Because later you may be asked, what was this $18,000 transfer? If you can answer calmly with documentation, you look credible. If you can't, you look like you're hiding something, whether you are or not. And credibility matters. It influences negotiations, mediation, and sometimes the court's perception. Stage 3. Protect cash flow and credit because that's your oxygen. A lot of men think the settlement is the main event, but the most damaging period is often the months in between, when your household goes from 1 unit to 2 and your expenses multiply overnight. So stage 3 is about survival math. First, write down your baseline monthly expenses: housing, utilities, insurance, food, car, medical, debt payments, subscriptions, everything. Don't guess. Second, stop emotional spending. Divorce triggers impulse purchases: new truck, new furniture, expensive dates. I deserve this. But what feels like relief today can become debt tomorrow, right when you need stability. Third, watch joint accounts and joint credit like a hawk. If you have joint credit cards, you need to understand your liability. At minimum, set transaction alerts. If advised by counsel and legally appropriate, reduce exposure. Fourth, protect your credit score like it's your reputation, because it is. Missed payments, maxed cards, and sudden debt can affect housing, refinancing, insurance rates, even job options. Stage 3 also includes one controversial but important decision: moving out. Some men move out to keep the peace and later regret it. Some men stay and the conflict escalates. The point isn't one size fits all. The point is, don't make that decision emotionally. Ask your attorney how moving out affects leverage, temporary orders, and property claims in your jurisdiction. And if you do move, document what you took, what you left, and what you were paying. Keep records. Gray divorce is long. You will forget details. Records don't forget. Stage 4. Protect retirement and future assets the right way. After 50, your largest assets are often not your checking account. They're your retirement accounts, pension, business equity, and home equity. This is where men get hurt long term because they negotiate like the goal is to end the conflict, not to protect the next 20 years of life. So ask the correct questions. How will retirement accounts be divided? Do you need a QDRO for a 401k or pension? What are the tax consequences of selling the house versus buying her out? Can you actually afford the house alone with taxes, insurance, maintenance, and a single income? Many men keep the house out of pride and bleed monthly until they are forced to sell under pressure. Pride is expensive. Numbers are honest. Also, think about health care. COBRA can be expensive. Medicare timing matters. Supplemental coverage matters. You don't want a great settlement that leaves you uninsured or financially strained from medical care. And I need to warn you about one seductive sentence: "I'll just give her what she wants so this can be over." That sentence has ruined more men than divorce itself, because quick peace today can mean slow poverty tomorrow. A calm, fair agreement is good. A guilt-driven surrender is not. Negotiate like a man who plans to live well. If support is involved, understand the triggers, the duration, the modification rules, and what happens if either person's income changes. Don't guess. Don't assume. Put everything in writing. And do not hide assets. It's illegal, it backfires, and it destroys your credibility. Your goal is not to win. Your goal is to exit with a future. Here's a simple checklist you can run this week. 1. Consult a competent attorney and ask directly about the marital home, retirement division, and temporary orders. 2. Inventory all assets and debts. Write it down. 3. Pull your credit report and set transaction alerts. 4. Secure documents, taxes, statements, policies, business records. 5. Lock down digital access, passwords, and recovery emails. 6. Build a 90-day budget and protect cash flow. 7. Get emotional support. Therapy, men's group, trusted counsel, because financial discipline collapses when grief is driving. If you do these 7 things, you will be ahead of most men in your position, not because you're smarter, because you're earlier. But there is one final terrifying realization that most men only discover years later, and it's the reason I'm making this video. Here it is. In gray divorce, your long-term outcome is often decided by what happens in the temporary phase. Temporary orders, temporary support, temporary living arrangements, temporary bill-paying habits, because temporary becomes the new normal while you're still in shock. So don't sleepwalk through the first 90 days. Move early, document early, stabilize early. That's how you protect the next decade. If this helped you, subscribe now and watch the suggested video on the screen because it connects directly to this and goes even deeper into the gray divorce pattern. I'll see you there.